Okay, what's good, everyone? It's Nigel here, Trinidad Empowerment Network. So the S&P Global Ratings just revised Trinidad and Tobago's economic outlook from stable to negative. Whilst keeping our investment grade rating at a triple B minus. So all of this sounds like finance speak. And it is finance speak. So today, I'm going to unpack all of this. I'm going to break it down. What does all of this mean for Trinidad and Tobago? Who is the S&P? How is this likely to affect you moving forward? And where does this put Trinidad and Tobago in the grand scheme of things? So what is the S&P? Who are the S&P? And what do they do? You may be asking yourself. So the S&P stands for, and I had to do my research into this, by the way. I'm no finance expert. I am no finance expert. I had to do my research into this to bring this to you. So the S&P stands for Standard and Poor. It's one of the world's major credit rating agencies. So you have to think about them as a global credit score service for countries. A global credit score service for countries, not individuals, for countries, and sometimes large companies, multi-billion-dollar companies. So why does this rating matter to Trinidad and Tobago? Just like your own personal credit rating, just like your personal credit rating or personal credit score, what the score the S&P gives you affects your loan interest, the interest you pay on loans you borrow from other countries. Now, countries borrow money from other countries. Most of you probably know that, right? The credit score set by S&P, and there are a couple other agencies as well, but the credit score set by S&P kind of guides how much you repay, or the interest rate at which you repay the money you borrow from that country, right? So the lower the rating, the higher the interest rate. So the more money you pay back. African countries suffer the worst from this. This is why Burkina Faso and Abraham Traore is against the IMF and borrowing money from the International Monetary Fund or the World Bank, because they lend money at such a high rate, they have to pay it back at such a high interest rate, they find it difficult to do so. Anyone with low credit rating know the feeling. You try to borrow money, and if your credit rating's low, you get offered the money, if you are indeed offered the money, but the interest rate at which you are given the money is so high, it could take you years to pay back. Some people, it keeps them in debt for a very, very long time. So here's what the local media in Trinidad has to say about all of this.
Standard & Poor's Global Ratings has shifted Trinidad and Tobago's economic outlook from stable to negative, though it left the credit rating unchanged at BBB negative. The agency cited falling oil and gas output, weak public finances, and rising debt as major risks. Energy accounts for almost 80% of exports and over a quarter of government revenue. S&P projects growth of only 1% in 2025 and 2026 and flagged a US $1 billion bond repayment in 2026 as a key pressure point. The move follows S&P's annual review meetings with Finance Minister Devindranath Tanku, central bank officials, and senior policymakers in late July. S&P said it could lower the rating in the next 2 years if the government fails to rein in spending and diversify the economy. It pointed to the Heritage and Stabilization Fund as a cushion, while strong energy exports should keep the external accounts in surplus.
So there you go. What is a triple B? Let's start with a triple B minus rating, which is what we are. which is what the S&P have rated us for the last few years. The ratings go from triple A, that's the best. Triple A is the best. Then you have double A, you have triple B, and so on and so forth. A triple B minus is one of the lowest levels of investment grade. It's one away from the lowest. It's one away. One step lower is junk status, for want of a better phrase. One step lower from triple B minus, which is what we are, is essentially junk status. This scares investors and raises borrowing costs. So anyone looking at investing in Trinidad, any huge international investors looking at investing in Trinidad, the first thing they look at is something like the Standard & Poor credit rating. The worse or the lower the credit rating, the less likely they are to invest in Trinidad and Tobago. This is why this is so important. So what is a negative outlook? Another phrase that you may have heard on that video. Negative outlook. The outlook is S&P's forecast for the next couple of years, for the next year or two. So how they see the country performing, essentially. Is it good? Is it bad? And this is why they've rated us as negative. They see us performing badly over the next year or two. A negative outlook is like a yellow card warning. It's the best way I can describe it. A yellow card warning. You are okay for now, but fix up. Fix your problems, or we will lower your score. Lowering our score puts us in junk status. If we go down to a double B plus, we are in junk status. So investors are less likely to invest in Trinidad. If we were to borrow money, we will be borrowing at a substantially higher interest rate. I hope you are still with me. I hope it's making sense to you so far. So what has the S&P actually said about Trinidad? What have they said about Trinidad to put us in their negative book, essentially? Here is their message in plain language. They essentially said they predict only 1% growth in 2025, this year, and 2020 stagnant. That is virtually stagnant. That is not great. Hence why we have been put in their negative book. Number two, they see heavy, Trinidad, as you know, is energy dependent. Oil and gas still provide over 25% of government revenue and about 80% of our exports. But when production remains stagnant, that is not a good look. As we know, we rely so heavily on oil and gas, we are not in any way diversified enough. Our economy is not diversified enough. Another thing is our Heritage and Stabilization Fund. Our Heritage and Stabilization Fund. So what is that? That is the money you put away for a rainy day. That is essentially the money you hide under the mattress or wherever you put your money for a rainy day. That is shrinking. That is shrinking. And they see that as an issue as well. That also puts us in the negative. Again, all this talk about diversification, if it's not happening, that doesn't help. Another thing is the pressure we have from debt. We have a $1 billion US dollar bond that's due in 2026. A $1 billion US dollar bond that's due in 2026. That does not help. That does not help. So these are the sort of problems that we are facing in Trinidad and Tobago right now. And I haven't even mentioned foreign exchange. A shortage of foreign exchange. Businesses can't easily access foreign exchange in Trinidad and Tobago. So that makes it difficult for them to import goods. which slows down activity and pushes prices upwards. You see almost on a daily basis the foreign exchange issue in the news. You hear the Prime Minister in the past talking about a foreign or a forex cartel operating in Trinidad and Tobago, meaning there are people in Trinidad who has first dibs, who has first hands on the money coming into the country, and the small businesses, well, they see nothing. So I'm going to conclude on why this matters to Trinidad and Tobago. Why does all of this matter? A downgrade would mean higher interest costs for the government. This should worry everyone. Higher interest costs for the government, which obviously, if that happens, that trickles down to you. That trickles down to the taxpayers. So you will see increased taxes potentially, reduced services potentially. This, all in all, is not a good thing. A weaker TT dollar makes imported food, imported medicine, and equipment way more expensive. The weaker the dollar, the more expensive it is to import goods into Trinidad and Tobago. You may also have investors pulling back. And if investors stop investing in Trinidad and Tobago, then you see job losses, you see lack of opportunities, you see small businesses suffering. Again, it's not a good thing for the country. So we need to either stay where we are or try and get up into the A ratings, which we've never been from my knowledge. But we certainly do not need to go the other way. So what needs to change? What needs to change in Trinidad? I'd finally conclude by saying discussing what needs to change. Now, those of you who are in tune with Trinidad Empowerment Network, I talk about diversifying the economy all the time. We are too over-reliant on oil and gas. We are over-reliant on oil and gas. We need to diversify the economy, and we need to do it now. We certainly need to negotiate fairer energy contracts. If you watched my last video only yesterday, you would see how much these energy companies who come into our country under the guise of investment take out of the country and do not reinvest into the country. That needs to be fixed ASAP. We need to fix the foreign exchange shortage. As I just recently discussed, the forex cartel, as the Prime Minister talks about, needs to be addressed immediately. If businesses do not have US dollars, they cannot buy stuff from abroad. We can't purchase stuff using Trinidad dollars from America. We need foreign exchange. We need US dollars. We certainly need to make stronger our diplomacy, especially with CARICOM, Africa. We need to diversify and find other streams of income. BRICS is something we need to align ourselves with, and we need to do it ASAP. We need to diversify who we trade with. We need to diversify because we are over-reliant on America. We predominantly trade, with America, and we need to diversify. We are scared to do so because America puts penalties on us if we try to do deals with any other country, like Venezuela. For the Dragon's Gas deal is a prime example, right? We know what happened to the Dragon's Gas deal. That got squashed because Trump does not like Maduro, so we can't do trade with Maduro and Venezuela. We need to diversify who we trade with. So the S&P negative outlook isn't it's a yellow card. It's the best way to describe it. It's a final warning that if the next budget is more talk without action, the next headline could be an actual downgrade. And that would be bad. That would be very, very bad. That will mean that every household in Trinidad will suffer. Every household in Trinidad and Tobago will suffer financially, and that's the last thing we need in Trinidad and Tobago. So I hope that now makes sense to you. I hope I've broken it down in a way that you understand a little bit more, at least what the S&P is, at least what they stand for, Standard and Poor. Yes. And let's hope that our leaders do something now. Less talk, more action. Let's talk more action to fix this issue because, like I said, this is a yellow card. One more slip up and we're downgraded. We do not want that. We do not want that. So that's it. I hope you understand a little bit better now. Please like, please subscribe, please stay informed. Please continue to build this network. The bigger we are, the bigger a voice we have, and the more we could hold the powers that be to account in Trinidad and Tobago. Like, subscribe, look after each other, and I'll see you guys on my next video. God bless. Take care. Peace.